Interest rates aren't moving, the economy's shaky, and condos are just sitting there, not getting bought. So, spoiler alert, we think prices aren't going anywhere and could probably fall more this fall. So let's dive into this. Lower interest rates could help with affordability, but that's really not the main driver anymore. Confidence isn't what it used to be, and now people realize that prices don't always go up. Now, you might think it's a bad time to sell in a down market, and it's true, but for buyers, it might even be scarier in a down market because it feels a lot riskier. Now, confidence is tied closely to the economy, which is driven by labor, inflation, and growth. Let's look at labor first. In July, we lost over 40,000 jobs, pushing unemployment to 6.9%. That is the highest in years, really, since the pandemic. And that is a huge reversal from June when we added 83,000 jobs. Now, on the inflation side, next week's numbers will be key. If core inflation is above 2%, the Bank of Canada has less room to cut without letting prices run hot. On the growth side, GDP data comes out August 29th, and that is expected to be flat or down. Now, the bank wants low inflation and weak economy to justify more cuts. So if both inflation and GDP drop, the odds of cuts go up. But if GDP falls too far, recession fears could really keep real estate pretty sluggish. Now, here's the thing. Rate cuts aren't the magic lever anymore. We've already dropped 225 basis points and prices haven't budged much. Economists think that we might get 2 more cuts this year, but the bond market is betting on fewer, only a 36% chance of 1 cut in September. And even if we do get a cut, it will only boost a borrowing power by about 3% for those on variable rates. And that is less than the monthly normal price swings. Just look at July, prices fell by 5% just from low confidence and slow activity. Plus, most people are on fixed rates these days that won't move based on rate cuts. Only variable rates will see this difference. So, the real driver, supply and demand in each submarket. Condos are oversupplied. We've got a wave of new shoebox-sized investor units hitting the market with almost no one buying. Speculation is dead, and without that fuel, condo prices will keep dragging. Now, houses are a different story. Demand is still stronger in starter homes, especially in more affordable neighborhoods. Families still need space, and if they can't get it without buying, they'll have to buy, even in a slow market. And with no new land in Toronto to build, the only way to add more houses is to knock an existing one down. And this steady demand plus limited supply will continue to keep a solid floor on prices on the house side. So don't expect a big rebound this fall. A couple of rate cuts might help some investors, especially those on variable mortgages who plan to refinance. But for most buyers, the real decision maker will be confidence in the economy. If the economy is weak, but not in full-blown recession, we could see a small pickup in activity. But if sellers flood the market this fall, like they have in recent years since 2022, and buyers don't keep up, we'll continue to see more downward price pressure. Now, smart investors will treat this as a buyer's market, which it is. And yes, the numbers will work if you know the right multiplex strategy. Forget chasing those headline flashy sixplexes for now. Half of the best deals we're looking at these days need less than $350,000 of capital. Our bread and butter? Buying fixer-upper single-family homes. Buy them for cheap these days, put in around $150,000 to split them into 3 units, and you're looking at over $2,000 a month in cash flow afterwards. Then you have an option. You can refinance and pull most of your capital out. And then from then on, use that capital to build another house in the backyard to push up your rents and monthly cash flow to over $4,000 a month, or refinance afterwards again and still keep $3,000 a month in monthly cash flow, but you also get more of your money back out afterwards. These are not theoretical numbers. We've done them ourselves and have coached hundreds of clients through the exact same process. lower capital, lower risk, solid returns. Now, if you are serious about investing in Toronto real estate and you want help finding high potential deals, running the numbers, and making the whole process a lot smoother, just book a call with our team. We're a full-service brokerage that lives and breathes Toronto multiplexes. From finding the right properties for you, crunching the numbers, helping you get the best deal out of it, to coaching you through renovations, to locking in great tenants, to even property management if you need it. Just book a call with us and let's deep dive into the right multiplex strategy for you.